Hey traders, today is Thursday, January 29th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the euro dollar. On the heels of yesterday's Fed rate decision, we got a 10-2 count. Fed held rates as expected. Some interesting commentary about job gainings have remained low. The unemployment rate has shown signs of stabilization, but inflation remains somewhat high. So we've been looking to see if there was going to be any shift towards more of an inflation focus for the Fed. But he did say that the upside to inflation and the downside to employment, those risks are diminishing. So really leaving the door open for a little bit, possibly more of an extended hold. Now, Fed fund futures haven't shifted. We're still looking for June as potentially the first rate cut expected. You're still about 62% here chance that we're going to see the first rate cut this year in June. And so the dollar just continued to take it on the chin. Now, the stretch has taken euro dollar into a critical zone. This is the same chart that we've been tracking and that we published on our yearly forecast. The big major zone is 119.17 into 120.20. This is the monthly chart on euro dollar. You can see the 100% extension from the advance off the lows in 2022. It's the 38.2 retracement from the decline off the 2008 highs, and those swing lows from 2012 all converge on current uptrend resistance. So only a couple days left on the month. We'll be looking at this with great interest into the close of the week. Now, you would need to see a monthly close northbound of 2020 to really fuel the next major leg of the advance. You're looking at 23.50s. You're looking at 24.14. That's the objective 2021 swing high, the 2018 high close. Those are both the first major technical hurdles if we were to mount this 2020 level on a monthly close basis. Here's what Eurodollar looks like on the weekly charts. Same formation. You can see that we've stretched well beyond that 2020 level, but we're more than 1% off the high already. So we are looking for a reaction here. We're right slap in the middle of that range, right below uptrend resistance. So the potential for some interruption, but we are pushing uptrend resistance right into the close of the month on Eurodollar. Look for a reaction here. Drill down even deeper. Here's what Eurodollar looks like on the daily charts. This was the largest single day range that we got on Tuesday there since way back here in April of 2025. And you can see that in that instance, you saw multiple massive daily ranges, just a short interruption before the continuation, the resumption to a new high. So we're still in the uptrend. Momentum has broken back from overbought conditions. So again, the threat for some near-term exhaustion is starting to surmount here. All things held constant, you're still very constructive while above the objective yearly open. That's 117.45. That's just where Euro clocked in the open for 2026. Drill down even deeper. Here's a potential slope for the uptrend that we've been in just over the last couple of days. You can see that we broke that December channel last week. That rally has pushed right through that key zone, and we're trading right back into that zone right now. Initial support comes in at the 2025 high close. That's 1866. If we're heading higher on this stretch, I wouldn't want to see anything below 18 proper, specifically 1810 into 1813. That's last year's high day close, and that's also the objective 100% extension of the drop off of this near-term high. So even if this is just a corrective move, max losses should reach 1810. You need to close above 2020 to mark resumption. And again, you got the 2017 high, which comes in right ahead of 121. It's 120.92. And then the 2021 high week close would be initial targets would be 22.18. So some levels to consider both on the near term and the longer term. Don't forget, heading into next week, we also do get ADP figures, and then we get the highly anticipated non-farm payroll report. So we'll get a more updated look on the employment and labor markets. We are still concerned and watching for a potential government shutdown this week. So what impact that has. Oddly enough, interestingly enough, the last government shutdown, which was the longest government shutdown we've seen in history, about 45 days, the dollar actually did pretty well. So we'll see what dynamic that plays into the end of this week. You also have those growing geopolitical concerns with regards to the problems and the rising tensions in Iran. Keep your eyes on the headlines. We'll try to keep you updated, as always, on MB Forex on X. Till then, best of luck trading. We'll see you next week. Cheers.